In this video, I show you 3 winning strategies that can help you maximize your profits in entering your trades, resulting in reduced losses but maximum profits. A first area where you can improve is when to enter into your trades. Because as you all know, you enter in at the wrong time when the market is reversing on you. Well, it reverses with your money. And so the whole point is to be able to interpret the charts to a point where you can enter in at the right time. And so I'm going to spend the first, I try to keep it below 10 minutes, just going over this basic topic of the week, which is knowing when to enter a trade. But one of the most important things, or one of the very first things you want to do, is to know what the trend is. That is gold. What is the trend? Is the market uptrending? Is the market downtrending? And the best way to look at the trend is always on the higher time frames. It's got to be always on the higher time frames. Right now, I have this on the 15-minute, but ideally, you want to be looking at your trend. You know, think about when there's a saying that says you can't see the forest, you can't see the trees for the forest. So, or you can't see the forest for the trees. That means if you're so zoomed into a forest, all you see are the trees. But when you kind of get this like aerial view, then you actually see the bigger picture, the whole forest. And the same goes with trading. You got to know what that bigger picture is, and you always do it on the higher time frames. You can use the daily. That is golden. You want to see what's going on the daily. Now, if the trend is upwards on the daily, as we can see here, this last few, well, this is a 50-minute chart. So let's pretend it's a daily for now. This would be a whole day. The 1, 2, 3, 4, 5. The last 5 candlesticks would represent 5 days of upward movement, which is a great time to enter into a trade. Now, if we look at this, the first section here, we see there was an upward trend, and then at this point, there was a reversal. So that is something for another topic, to identify when there's an imminent reversal, because you enter in a trade when there's going to be a reversal, then it's reversing again with your money. And that's one of the things we want to reduce that. We want to increase our likelihood of making a profit almost as soon as we enter a trade. I like to see green when I enter a trade, and I think most of us like to see green. Red is not a great color when you're trading. Except you shorten the markets, then you love red. But I tend to go long, meaning I'm looking for to make money when price increases on any of my trades. So that's the very first thing. Always check your trend. And when you're checking your trend, you're always going to check it on the higher time frame. So if we move into this second frame, now this is, I moved it to, what is this? Bitcoin and Tether. Okay, so this was last night, so Friday evening, and this is the chart on a daily. So this is awesome, because you can see that over the last few days, the last candle that we see here is a Friday candle. And the point is, for the last 3 days, 1, 2, 3, price action has been trying to get above the line of resistance. And that line of resistance, or price of resistance, if you scoot to the right here, is $4,833. So Bitcoin has been trying to get past the $48,000 price point, but there's an obvious line of resistance. There is a force, and that force is actually created by sellers. People are camped out at this line of resistance. As soon as price action is going to the 48K and above, they start selling. Selling always causes your price to go down. And that's what a resistance is. It's a tug of war between your buyers and your sellers constantly. So at this line of resistance, it's a tug of war. It's a question of who's going to win. When the buyers can outnumber the sellers, then we're going to have this situation here where price is just going to break out through the line of resistance, and that is always good. Now, I'm going to go to the third chart because the fact that price action breaks above the line of resistance is not a good enough reason to enter a trade. So what has happened here is the next thing you want to do after getting ready to enter a trade, you always want to go to your smaller time frame. There are a few times when I will enter into a trade on a larger time frame, and those are the times when I'm interested in entering a trade for the long term. Right now I'm interested in purchasing Bitcoin to hold. Once I buy Bitcoin, I'm not trading with the bulk of my Bitcoin. So once I buy Bitcoin, I'm holding 80% of it. And then I can trade with the 20%, but mostly I'm not doing a lot of trading with my Bitcoin because I am on a quest to acquire as much Bitcoin as I can. So that's always a good thing. So entering into your trade, the fact that you have price action at the line of resistance is not a reason enough to enter the trade. We can see the first rectangle. Price action did move up. It did that. It got to the line of resistance. You don't want to enter your trade at this point because what happened with the next candle, the sellers pushed the price right down. So you're waiting. You don't buy until price action closes. It's got to close. Price must close above the breakout. So the line of resistance is just, if you like, it's the starting line. We don't want to throw our money in at the start line. We want to be sure that that race is going to complete. And so these two red candles obviously have broken down below the line of resistance. So good reason why you didn't want to enter in this first rectangle. And so we're waiting, and then price action is moving back up again to price of resistance. Good, it's good. It's hanging out and hanging out at the line. It's not breaking above it. So we're still not going to enter into our trade. Now, when we get to this arrow, I'm going to point these two boxes. The first one, the first candlestick, which is called a gravestone doji. So what happened is price action did break out. It ran all the way up here, but within the space of 1 minute, it didn't close. It then ran back down again and closed below the line of resistance. This is a prime reason why you don't buy a breakout until your candlestick has completely closed above the line of resistance. This didn't. So if we move to the second candlestick, the green one, it actually closes. You see, the second candlestick actually closed above the line of resistance. So do we enter into the trade? What would you do? I know you can see the red candles, but let's assume we can't see those red candles. When this green candle closed above the line of resistance, it looks like it's time to enter a trade. But the one thing I have personally learned is to wait for two candlesticks to close. You want to wait for not just this green candlestick to close above the line of resistance. You actually want this second one as a confirmation that price action is going to continue upwards. Guys, if there's no confirmation, you don't enter the trade. Many of us are trigger happy, and what that is, because that's how I describe myself. Sometimes when my hand is on the button, I'm more prone to hit it than to wait. So I have been bitten with this bug so many times where you're so excited that price is moving up and you want to jump in there, but you know what? to be a good trader, discipline is probably another number one important thing. Discipline, you got to be disciplined. And that discipline will help you wait until 2 candlesticks close. So the first one did not close above. This green one closed above line of resistance. The next one closed below. So hopefully you didn't enter the trade, because what happens after that? That's what we want to avoid. We always want to avoid price reversing with our money, and it's not a good thing to see red when you're trying to make a profit and see green. Only enter your trades on these 3 breakout strategies. Literally, you must have a system for entering into your trades. To go over 3 of the, they are breakout strategies, and they are candlestick patterns that I look out for before I enter a trade. Now, it doesn't even matter if it's a long-term trade where I'm not necessarily attempting to scalp or day trade or swing trade. I still like to enter into a trade on one of these 3 breakout strategies. So the very first one, so it's a breakout candlestick pattern, and for each time I'm going to go to the same screen. And as a day trader or as a scalper, your 1 minute is so important. Your 1 minute chart is so important, because don't ever think of entering into a trade on the higher time frames. Don't enter in on a daily. Don't enter on a 4 hourly. Don't enter a trade on a hourly. Why would you do that? You want to enter, you want to zoom in on your trades, and you want to enter into your trades on your 1 minute and your 5 minutes. Breakout strategy, I think, is pretty basic, guys. If you're not using it from today onwards, make sure you start using it. So what is it? And you have seen the blue rectangles. That just shows your typical breakout. So I'm going to zoom in on my breakout here. And so you want to enter into Bitcoin, and we see that dip, nice dip, and we see the candlestick. This candlestick, by the way, is called a lower low green. Anytime you see a lower low green candlestick after downward price action, that's always a good time to enter into your trade. And you can see after this lower low green with the tail, price action moves up. Assuming price action moves up, you've missed it, and it starts, what's it doing here on this rectangle? It is consolidating. It's not going anywhere. It's just zigzagging, a little bit up, a little bit down. It's not really trending. Then the time at which you want to enter the trade with a breakout strategy is when it breaks above the line. So you would have drawn a line, a price line right there. It doesn't have to be a rectangle, just a price line. Because as soon as there is a move, and say I've missed that move and I was waiting to maybe increase my positions on a long position, I would create this price line, this white price line, and I would wait for that candlestick to break above it. Now, a point to take note of, which I tend to try to mention quite a bit, is always wait for your candlestick that breaks out to close. So each of these candlesticks are 1 minute candlesticks. So wait the 1 minute. Wait for the whole 1 minute and make sure it closes as this one has. Why do I say that? Obviously, you guys know this green candlestick in the first 30 seconds of the 1 minute can start off green, and the second half of the 1 minute, the other 30 seconds, it can end up red. Like, just go straight back into the rectangle and keep on. It can just, this baby here can keep on for days. It can keep on going sideways. So always wait for that close. So on the close of this second candlestick, then I would enter the trade. That's just to be sure. Now, it doesn't mean price action still can't retrace. It can't come back, but at least you're increasing your chances by waiting for a second candlestick to close. Okay, your second strategy is a crossover. I hope most of you have heard of the golden cross and the death cross, because I have made a couple of videos on it and the importance of the crosses or the crossover. So again, we're talking moving averages. To enter, guys, we're talking about entering into a trade. To be certain that a trade is definitely trending in the direction you want it to trend, then make sure you have the crossovers on the higher time frame, on the monthly, on the weekly, on the daily. I'm going to move over to the charts, and I have the green and I have the red, the green and the red. So with the green, we see my blue moving average is the 10-day moving average, and the yellow is the 20-day moving average. So these two averages, when any lower time average or any smaller time average crosses above any larger time average, so if your 20-day moving average crosses above your 50-day moving average, then we're calling that a crossover. And basically, I call them all golden crosses. I think it's only when the 50 crosses over the 100 or something that is technically a golden cross. But you know what? Once I get a crossover like we have at the green spot, you can see what happens with price action. The big green candlestick is the one that evokes this crossover. And as soon as there's that crossover, it moves straight into a consolidation. You wish it doesn't do these things, but you know what? It's price. What creates price action is how many buyers there are as compared to sellers. That's it. That's price action. But after this consolidation of, it looks like 8 minutes or so, what do we have? We still have that nice upward price action. And up here again, we have another bunch of consolidations. So you wait for the crossovers and then you enter your trade. Here's another crossover here, which I didn't highlight, because after this downside crossover where the blue, the smaller moving average crosses down below, see what happens again? Price action goes down. But look at this big one here. Crossover over here, and what happens? Price action plummets, literally. And so crossovers, make it part of your trading portfolio that you're looking out for your crossovers before you enter into your trade. Okay, and then so let's go back. So then the third breakout strategy is the pullback. The pullback is always occurring. Right? You have price action pulls up and then price action kind of retraces. So that is a fact of life with the charts. With candlestick patterns, we always have the pullbacks. Question is, are we utilizing these pullbacks? Are we letting them speak to us when we trade? The pullbacks are critical, and I think I have yellow, just one pullback. Yes, I think I have just one pullback on my chart. Okay. And that's enough, because we have pullbacks all over the place. It's a retracement. It's almost like 4 steps forward, 1 step backward. And it's okay if it's just 4-1, or if it's 10 steps forward and 2 steps backwards. Then we call it a retracement. If it's 10 steps forward and 10 steps backward, we're going to call that a reversal. That is not fun. We don't want reversals. Okay, so we have that pullback. I'm going to zoom in a little bit. And this pullback is important because what you want to look for, assuming you wanted to enter in on the upward swing, again, you missed it, or you want to increase your position size. Guys, always wait for the pullback. Now, one thing a lot of newbies do, and I had to train myself not to do it because it's hard not to do it, is to not enter on an upswing when price is when you have this green. It's hard not to jump in because FOMO sets in. You think, oh my goodness, this thing is going to the moon and it's going without me. I better jump in there and pick up coins, get a piece of this action, but you risk the pullback. So you pick up a coin right at this point. I'm gonna move this price. Let's say you pick up your coin right at this point on the uptick, and then you get hit by this retracement. See this retracement? Now this retracement, what if it ended up being a complete reversal where price action just kept on going down, like zipping all the way down. Well, you entered in on the upswing. So you want to train yourself not to enter in on an upswing and to calm down. Wait for the retracement. It will retrace. And when it comes back down, that's called the pullback. And once it pulls back, the minute it starts taking off again, that's when you begin to look out to get back into the trade. So you have the pullback and then you have the breakout. It's going to pull back as it did down to this line here. And we have 1, 2, 3. We have 3 candlesticks refusing to break below. So that's a nice line of support. This is how you find your lines of support. You find your lines of support when price action hits a level and it doesn't fall below. It's a strong support level. There are trading bots buying up positions at the purple level, refusing to allow price action to break below it. So that's how you know this is a line of support. And you want to buy on the line of support. You don't want to buy on the line of resistance. You know. So. Well, that's all, folks. I hope you've learned something from this video. And if you have, the only thing I ask is that you hit that like button, comment below, because I do use your comments to better inform me of what other content to create. Share with your friends and family. Make sure you subscribe to my channel, but most importantly, don't forget to hit that notification bell. That way you get my videos as soon as I upload them. And I'll meet you in the next video.